Good evening. It is approaching 6 p.m. for me, and we will begin by looking at a 15-minute Dow chart. Last night I cleaned up this chart a little bit and drew some new levels. You see this channel. Let's zoom out, and so I had some horizontal levels drawn in green, and I had this this trend line and made it into a channel. The red color here. So this was sort of the bigger picture, relatively speaking, right? Because we've been going through short-term trading. So this is really what the picture looked like coming into today's session. So let's dig right into the 1 minute chart. Okay. There were 9 trades made here. Some of them were scaled into, and the way it turned out, there was really only one losing trade. But that doesn't mean much at all, right? You can have a lot of small winners and then a big losing trade, and you can imagine it can get a little frustrating. But when you can keep the losses small and scale into some trades that really run, you could do well. So what I did today was I used the big picture that I showed you before, and I started drawing this channel, and I knew I had some horizontals here as well that I drew not last night. These were drawn earlier today. You see, you had this bounce here. Let's make this a little larger, and I took a long here, a couple of longs, a scalp short. I scaled into another long, and then we broke out. So then this blue line is sort of a steep trend line that you would just, maybe connect a couple of points and get a sense of how the trend is going. So I decided to short here. Okay, and I scaled into additional shorts. And the very the line we had drawn, similar to yesterday and even the day before, it came into a level that we already had drawn, and then some price action showed us that it's really going to retrace, or it's very likely that it will retrace. Right? You actually had a gap here on this 1 minute chart, which when that happened, I got a little more comfortable with the trade, because, of course, the flip side of this is the trend just really starts to get strong and start moving against your position, which is why when you trade like this, you really need to start working with small sizes. Your risk management means everything with an approach like this. And you have to be ready to take profits and not, insist on much larger profits. That's being greedy. You see, and then you could see what happens. Well, why not? Right? Look at this big move. Well, I'll go back to, one of these, a third of this position, if you want to consider this whole, these 3 trades of position, a third of that could have been left to run, and this went down 60 pips, and then of course you had some nice moves later on. But this was all in the space of, let's just quickly, that's an hour. right? What did I do? This is a 1 minute chart. And if we, it's not to say we weren't, you know, analyzing the market, but, the actual trading was in the space of about an hour. So you don't need to make 9 trades. You don't need to scale into this 3 times. But this is just something that I think some people may get something out of, right? It's just horizontal lines, larger levels. This is from the 30-minute chart, right, or 15-minute chart, whatever it is. The point is, on a 1 minute chart, you can try to get some of this, get some of these bounces and these moves off of the larger levels, right? This was sort of a nice candle pattern. Let's just finish it by looking at this a little closer. Okay, so this could have been a really strong first leg, and then after this this bearish bar, it could have run. So you have to keep that in mind. But look at this: you had a doji, you had a long tail, and you had a very bearish bar close all the way here, and that was a hint maybe, or it would give you some confidence to hold on, and obviously you could have reaped larger gains. Okay, thanks for watching.